Good evening. Ira Epstein with your metal market update, and this update is for Monday evening. We're at December 19th, 2022, 6:10 p.m. Central Time. You know, the hardest thing when you get into markets that you come into big reports, you enter a holiday period, which we're on. You'll have only 3 more days, and then we're into the Christmas trade. We'll be off on Friday. Then, you know how the markets work. It gets a little thin, to say the least. But since the FOMC meeting and the other banks that all joined in, that was a real confluence of so many banks at one time, the markets haven't given you trade setups. If you go back on your charts and you look on the futures markets, December 13th, most have done a vertical price dive since then. So the question is waiting for the markets to come to the end of that break and decide what is next from there. Do I still think we could have a Santa rally? Sure. Can come in right after Christmas Day and then last right into the beginning of the year. No reason why not. Do I think we'll go up for new highs on the move? No. Do I think the Fed is going to back off the way that so many traders do? No. Do I think that we're hoping that 2023 will be the year where we do see the CPI numbers, inflation numbers slip back, and the market gets the sense that the Fed's got their arms around everything to make the markets a better market? Yeah, I do think that that's what we're all waiting for. So right now, if you look, you get the bonds and notes still coming down a little. You were down tremendous amount in the gas today. I mean, a tremendous amount. And we have a storm warning, the likes of which I haven't seen getting ready for Chicago. Lived here all my life. I've lived in other cities as well, but I've always kept a Chicago residence. And to make a long story short, they are talking a monster winter storm for the city. They're talking 12 inches plus. That's a lot. We're right on the lake. Sub-zero temperatures at parts. Winds 50 miles an hour. And they're telling everybody, watch out. The airlines are now canceling flights free. So if you wanted to change things, this could be a big event that hits America. And it'll be going from the center right through many parts of the country. It's going to be a wintry Christmas. So those of you that like skiing, you're going to have a ball. You might be able to do it in downtown Chicago from all I can see. When we take a look at the metal markets, all under a bit of pressure right here. The dollar was stable today. I think that's very important. For the first time, we're getting a bit of stability coming back into it. So let's take a look, if we could, at the charts and get a feel for what's going on. First, for the week, we're pretty flat, down 0.2%. The market is staying over the 18-week moving average of closes. That gives you an upside bias in the market. When we look at the price action, I think you'd agree, we haven't gone anywhere for a very long time. You had your up move, then we went into a stall, and you're still very much in that stalling attitude. And area. Is there a chart pattern here that makes sense? Not yet. Higher high, lower low. I haven't put out a trade in this market and many of the markets in over a week, in many, many markets. I want to put out trades. You're getting these setups that they keep you away from the market. Where's the battleground? It's easy to see. You're caught at the 200-day average in gray up here. Then you have the 18-day average, and you're caught in that. The 100 is down here. When I look at the Bollinger Band, you had your attack of it, and you went right back down. That's what makes this so interesting. The market is staying over the 18-day average, so it's keeping the upside bias. It's waiting, I think, for a signal that said, go with it. Which way? That's the issue. If you close back under here, get under 1782 and close under that, you open the door up to get back down here. If you can start fighting your battle against the 18-day average and flip up, you're looking for the highs back here. I happen to be in the bull camp in the market for the inflation reasons, everything else going on, plus I'm a dollar bear at this point in time. When I take a look at momentum, down. So you have momentum down. You've got the market fighting the battle that we just saw and sort of just married itself to the 18-day average area. The gold-silver ratio, as this climbs up, it says silver's getting a little weaker than gold. You have that going on. Again, in this market, I just want to show the pattern. higher high, lower low. You lost the overbought condition now, momentum pointing down, and you've just worked out of being overbought. Again, because you're staying over the 18-day average, is the market coming down to give you another setup that might go back to the upside? And the reason you say that is eventually what's going to happen is the inflation might work its way in here, the dollar, countries that come out of COVID. We don't know what's going on in China. 2 deaths are all that's been reported since all this new chaos has gone on. Do you believe in a country of that size you have 2 deaths? You know better than that. Is it 500,000, 1 million? That's more realistic for the whole country. We're waiting to see, but they're not letting out any information. In the copper market, will you be able to get back under 370, 330? And if you do and stay there, do you open the door up for a breakdown here? Why do I say down? Because if China's reeling from COVID, and I believe they are from all I'm reading, and that goes on a while, you will hurt that demand for that market in the near term. So that's the only reason I'm saying it. Could the market reverse and get itself bullish? It could, but it can't do anything when it gets this pattern of a higher high and a lower low and just hanging at the 18-day average of closes. When you look at the platinum market, first we move to the April. You hit the upper band, bang. That's exactly what we teach in the course. You're oversold, not an area I'd want to get aggressive on the bear side. You'd have to fully embed to get me real excited. And I think you're getting very close to where support's going to show up at the 978.40 zone, which is the lower Bollinger Band. In the palladium market, it's the same thing. You got up to the upper Bollinger Band, you completely failed. And since the 13th or so, when we had the FOMC meeting, this market has come shooting down from 2003 to 1654. So it's a $3.50 break. That's a big break in this market. A $350 break, $350 break. That's a sizable break in this market. It's into oversold territory. It's 3 days now under the lower Bollinger Band. No, you're pulling on that rubber band, you're probably going to get a bounce out of the market. In the dollar index, we have been oversold and staying that way since the beginning of the month. It really hasn't done anything. And since then, I think you'd agree with me, we haven't gone anywhere. Now, the overall trend is down. If the market can lift itself and get over today's high, you could set up a pattern of higher lows, higher highs, into the 18-day average to fight for the next direction. Close over 104.80, you're going to get people saying, maybe this is where a bigger rally unfolds to the 106 area. I have my doubts about it, but that's what the chart action is saying. So when I look at the markets, it's exciting. The question is, which way do you go with all this? I'm going to get rid of, just so you can see, the February, and we're going to move to the March today. So as I get into the next chart, you'll have that number there. You can see in the evening setup. Now, very important, I have released, past tense now, the outside day course. I told you it would be today. If you have a mailbox, I sent you a mailing on it. And I am offering a special pricing for Christmas, right through Christmas, Sunday evening, to be honest. And that's the sale will end. Normally, this course is going to run $120. I'm lowering the price for you just for this Christmas time to $90. Outside days are very common. They're normally a continuation pattern. If you have 10 outside days, if you do your count, you'll see 7 or 8 out of that. Generally, you don't step back and take out if it's an outside day up that low. How do you use that? How do you build a position with it? What do you do with it? So what I decided to do is walk you through in this particular instance and give you an idea as to how it works in ETFs, the stock market, the futures market. Covered all the different parts and how often they show up. So it is a real interesting pattern. It is not a pattern that generates, if you will, a new, hey, sell here, buy there to get to the Bollinger Band. It's not what it's about at all. It's a pattern that, let's assume you're bullish and you get a pullback in the market off this. What are the odds of taking out the lows of that outside day up? Or if you want to go short, the outside day, have a stop over that high. How many days do you wait before it's taken out or not? What does it mean if it is? And if it's violated, let's assume you have an outside day down and you take out the high of that day, where might the market be going? It's all explained. I think it's 9 or 10 videos that's in the course. You get the course. You're going to get 2 weeks to all my research. You're going to get the charting software. The value alone is more for that I just told you than the $90 you're paying. We will charge you over $60 a month for our charting software. We're going to charge you for my research well beyond that for 2 weeks. So you put it together, you get the course basically for free. It's a great gift. If you have a chartist or somebody you like, give them something like this. Could be very, very interesting for them. How do you get it? You can either go to our website under education or move your cursor up here. You'll see an icon, give it a click, and away you go. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow. Take care.